Hello and welcome. You're watching the Global Reset with me, Prashant Nair. India's primary markets have been a big contributor to the overall wealth creation story over the last 5 years or so. As India's market cap zoomed to $5 trillion, we saw a large number of listings across sectors during the period. More recently, we've seen sizes of IPOs now zooming past $500 million in several cases. However, the trends and listings have not always been consistent. Today on the show, I have with me on the sidelines, from the sidelines of the Motilal Oswal Global Investor Conference, Amit Ramchandani, who is the MD and CEO of Motilal Oswal Investment Banking, Rohit Mantri, who is the MD and co-head of private equity at Motilal Oswal Alternatives, and we have Ajay Menon, who is the MD and CEO of Wealth Management at Motilal Oswal Financial Services, to decode some of these trends and give us a sense of what is really happening. Gentlemen, all of you, thank you very much for being here, a part of this show today. Prashant, this side. I'm going to dive into some of the topics that I want to discuss, but just have one common question, which I think I'd like to ask all of you. Amit, let me start with you. What are you looking to get out of the conference, which kickstarts today? What's top of mind for you?
Hi, Prashant. I think the trends have changed so fast. The idea is to try and understand what investors are looking at and try and get them those papers from the primary market. Also, it is important to understand the diverse family offices and the domestic money. Which sectors is it flowing in? So that's the biggest takeaway from the IB team.
Okay. That is IB. What about private equity? Rohit, what's top of mind for you?
No, we have seen very strong participation from domestic investors in many of our companies also going public. I hope we will see a different trend for foreign investors also starting to feel FOMO. And hopefully this conference and many other such conferences or successful listing of many companies change that trend.
Foreign investors also hopefully feel FOMO. That's a good wish to have. Ajay, what about you? What's on your mind?
Yeah, thank you, Prashant, for having us here. I think we have seen great set of results in this last quarter, and you know that Nifty has been here for the last 2 years. I think the big thing to take away is that which companies from here can be looking at the growth story and the way the valuations are looking, how India story is going to come up, and when is the FIs coming back to the to buy rather than sell, or at least stop selling. That will be the biggest opportunity to look at.
Yeah, absolutely. So let's get into some of these themes, and just wanted to get a quick sense from each of you what is on your minds. I mean, let me start with you, right? It looked like it would have been start of the year. It looked like after a very sizzling hot 2025, 26 would be so to speak, a thanda year. And actually, it was weak, at least for the first half. But July has really turned things around, hasn't it? Starting July, I mean, lots of IPOs, some very large ones lined up. So it's suddenly looking a lot more upbeat.
Yeah, no, Prashant, you're right. In fact, the last 3-4 years have been very transformative for the entire Indian capital market journey, right? We used to do maybe 25 IPOs a year, raising 25 to 30,000 crores. Last year, which was FY26, we ended up doing 112 IPOs, raising about 1,78,000 crores. And this year, we'll probably look to double that. Not only the scale has changed, but the sizes have become humongous, right? We are looking at 30,000 crores plus of NSE, 40,000 crores of Geo. These were practically the entire raises in a year from the total IPOs. What has also changed is really the retail participation and the process itself, right? It used to take T plus 12 days to settle an IPO. Today we are doing it in T plus 3. You used to run around and ensure that forms reach each and every corner of the country in physical forms, right? That has changed. You have ASBA, where money doesn't even go out of your account and you're quickly able to apply in the IPO and get your allotments. What's also changed structurally is the domestic investors. For the 20 years I have been in this market, we used to run around US, UK, 10 cities, try and get subscriptions from there. Today, BKC and low apparel is all you need, and the entire capital is here. Lots of enthusiasm, lots of new investor categories. Also, pre-IPO capital is a new trend that you're seeing. Money is available to those who are looking to grow, and that's been biggest change that we have seen.
Yeah. No, and also what is on offer seems to be different, right? I mean, I think, I remember if you had an IPO, you could kind of broadly bucket them in this or that category. But now you have lots of companies which,
Yes.
I mean, you have to really ask them, so what do you do? I mean, it's not, I mean, they're kind of the first in the list of companies, and perhaps more will follow. I'll give you examples. There was a company called Leap India, which just listed. I think, Indomim metal injection. Leap, of course, makes those, pallets for manufacturers. So, and this is just top of my mind. I mean, there have been so many others which, so I think the breadth of the offering, you would agree, Amit, has also become much wider. And this is not just this year. I mean, it's been happening.
Absolutely.
Even last year,
New age
the year before that, lots of
industrials.
stuff, new stuff.
One is saying huge. Yeah, yeah. Also, I think we are also starting to face a challenge, right? The buy side, which is investors, typically used to have analysts in a particular sector. Now, the biggest problem is who do you take this to, right? Whether industrials, tech, right? New age businesses. So it's interesting stuff that we are seeing, and these newer companies are also generating huge demand.
Yeah, yeah. They are generating huge demand. Amit, any trends in terms of pricing, etc.? Okay, I'll get to pricing in just a bit. A very near-term kind of question, Amit. This flood of IPOs that we are seeing after a slow first half, is this because of, results have been good, mood is a little better, the oil shock is old, so it's not having the same effect. So is this like a temporary window people are trying to rush through as much paper as possible? Or do you think, I mean, this is now here to stay?
No, so here to stay, as I said, if you look at the number of documents, one would have seen 147 approvals from SEBI, another 70 waiting approval, right? Typically, you see a lag between secondary markets and primary markets. Valuations had become very reasonable in secondary market, and primary market sort of got muted because of that, because people were buying whatever they had to in secondary. Now that secondary market valuations have moved up and primary is coming at a very reasonable valuations, people are subscribing to the IPOs. As far as we can maintain that balance, you will continue to see a lot of investors continue to subscribe to these IPOs. The other important trend that we have seen is mid-cap and small-cap are the ones where people have seen earnings. That is where inflows are coming. As you said, that index has not done much in the last 2 years, but if you look at small cap and mid caps, and that's where majority of the IPOs are, right? Which is why you see the trend of a lot of IPOs coming and getting subscribed very well, and listing gains also coming too. In fact, we listed Molbio today. It listed with a 25% gain. Last 8 IPOs that Moti has done, again we have seen 20 to 35% gains in all of them.
Yeah, yeah, got it. Amit, talk to us about what is happening on the private equity side. I mean, what are valuations like? How are exits looking? Have exits slowed down? Holding periods, have they lengthened? Just give us a flavor of what you're seeing so far this year.
Sure. Before I move to that, I think one other important trend that we have seen in these markets is the need for primary. I think corporates have started raising money for expansion,
yeah,
which wasn't the case in the last 3-4 years. In fact,
yeah,
if you look at the number of QIPs, right, last year we raised about 62,000 crores, did 29 QIPs. This year, in the first 5 months, we've almost reached that number, and it's likely to double. So you're actually seeing expansions fueled through through, right? Now, coming to your
Which was,
question on private
sorry,
equities,
the private equity,
I think...
I mean, sorry. That question was for Rohit. I misspoke. But your point, I take your point.
Okay.
I take your point. I think there was this number doing the rounds over the last 4-5 years. This is, of course, backward-looking data, which is that only about 15% of funds raised through IPOs was going to, land, equipment, machinery. Bulk of it was essentially, just cashing out, right? Which you're saying is changing. So people are raising money for expansion, which is the change that you're pointing to. Okay, let me get Rohit in. Rohit, give us the private equity color. What's happening?
No, it is in fact very coincidental. We had the Motilal Diagnostics listing today, which is one of our portfolio companies which got listed at 25% premium. Overall, if you just see 40% of IPOs that we are seeing right now in the market are in the main board are actually PE and VC backed. This number used to be between 15 to 20% pre-COVID. So between 2016 to 2020 was a real lull period wherein public market exits was less than 20%. And today we are seeing all the IPOs that you are seeing in the main board are either PE or VC backed. Even in last 15 days, all the IPOs that you were talking about, be it Manipal, Leap, Molbio, and Dhoot Transmission, all the large IPOs were actually all PE and VC backed. So we are seeing a good proportion of public market exits, so to speak, either IPO or market sale. I would say broadly, in last 3 years, this number is hovering around 50 to 60%. So 50 to 60% of private equity exits are happening through public markets now, either through IPO or through market sales.
So you're saying around, on an average, 40% of main board IPOs are essentially PE backed, which are now coming to the market.
That's correct. Absolutely.
Wow. Yeah, actually,
and from a private equity perspective, and from a private equity perspective, public market has become a 60% source of exits.
60% source of exits. Okay. There are secondary transactions, etc., which are happening as well, right?
Yeah. So naturally, when you take the company public, there are of course block trades which will keep on happening over a period of time. So when I'm saying this 60%, this includes both the IPO and non-IPO trades.
I get that. I get that. Got that. And just in terms of valuations, etc., Rohit, give us a sense of, public versus private. I mean, especially on the PE side, the general perception is that, these are sophisticated, smart investors who know how to extract value. And by the time you get something to the market, it's kind of juiced out. So where does that leave pricing in that sense when you come to sell?
No, Prashant. Yeah, Prashant, this has now gone upside down. If you really see, if I just tell you the construct of the market today, in public markets, you are seeing FII selling, which we were talking about, and lack of foreign investor money coming in the country. On the other hand, on the private equity side, if you really see, there are global private equity funds raising India-specific or even Asia-specific vehicles which have allocations to Indian markets, which means the flow of capital on the private markets is not as bad as we are seeing that in public markets, which in turn naturally has a valuation impact. So I would say private markets need to catch up with public markets. The private markets are still pricier. For the quality deals, the valuations are very, very high, even on private market side, even now, because of good dry powder which is available with private equity funds as well as global funds operating in the country. On the public market side, naturally, you have all the domestic MFs as well as domestic institutions driving the valuations, which have been, I would say, as a PE seller, being very, very modest and reasonable. And that's why private equity have also matured and have started to look at IPOs as liquidity event rather than exit event. And it's naturally post the IPO for next 3 to 5 years that you typically hold an asset to get the right fair share of monetization from those companies.
No, so, yeah, and hence this secondaries which keep coming, right, over a period of time that you refer to.
That's
So,
right.
so what you're saying is private equity currently is a better buyer's market than a seller's market. That's what you're saying.
That's right. So public market, if I define in one line, today it is good quality companies at buyer's price. On the private side, I would say demand and supply is quite equal, wherein large dry powder is chasing too few companies.
Yeah, yeah. Fair enough. Got that. Ajay, let me come to you now. Give us again, I mean, you know, the wealth business has exploded in India. You know, I guess wealth creation begets more wealth creation. Lots of these exits, etc., are coming back to the market through channels like wealth management companies and whatnot. So give us some color to kick this off in terms of what you're seeing on the wealth side at Moti.
So if you have seen the IPO market from, say, 2023 to current, you saw a lot of frenzy in 22-23 and then bottoming out 23-24 and 24-25, you see the maximum flows of, say, 1.77 lakh crores. But if you look at the overall participation, the HNI participation is much more compared to the retail. If you look at the overall subscription levels also, is much lower compared to earlier years, which only says that the retail is here, but they also are now looking at quality or looking at more from a longer term investment opportunities rather than only from a listing gains. Because the listing gains, if you look at it from last year to current year, is much lower compared to what it was 2-3 years back compared to now what it is. So you are seeing retail participation, but now it's not about applying for every IPO, but looking at the quality of the IPO, whether it can be a part of the portfolio in a longer term, how can that be, how is the management, how is the quality of the overall company. So that is now coming up when we look at from an advisory wealth management perspective. So it's not about just applying based on the premium in the market, but looking more from a quality angle and ensuring that they are able to hold on to it from a longer term perspective. Although the number of accounts which are opening is surely much more, and it is much more broad based. It's not only about direct equity, it's also through the SIP route, the MF route, the ETF. So that is a broad based participation which I would say now.
Yeah, yeah. You know, Ajay, so, you know, Moti is an advisory-based broker, right? As compared to being a discount broker. Give us a sense of how is this different? How does that influence retail behavior? And post-listing, what is retail behavior like? Are they there on day one to sell? I mean, you know, can one make a broad generalization which would be correct, or this is very different depending on what the paper is, what the IPO is?
So that's what earlier it was all about ease of investing and the ease of doing business or opening the account and applying for the IPO. But now the retail, when I look at it, there are so much flow of IPOs coming in. There is a lot of discussion before the IPO whether this can be an investment from a longer term perspective. How can it be a part of my portfolio? What is the diversification strategy? A lot of new industries coming through the IPO route now, which was never being available in the public market. So how can you have some allocation to these new sectors? So to that extent, when for us, managing the wealth advisory firms, we are very clearly looking at retail in a much more broader based participation and ensuring that it becomes a part of the overall portfolio rather than just looking at listing gains, which was the earlier cycle. And even if you see now the flow of IPOs, everything is not getting listed with a premium. There are some which are coming at a discount also. So people are looking at IPOs from much more broader perspective rather than pure listing gains.
Yeah, got that. Amit, just to come back to you, what kind of, when you look ahead at the pipeline, forget the large mega listings, right, which are NSE will happen and Geo will happen, and you know, globally, of course, end of the year there'll be all this Anthropic and OpenAI and whatnot. But in India, you know, one thing anecdotally one can say which is really getting top-notch valuation premium is manufacturing businesses, right? It used to be consumer a decade back. Actually, even whatever, 5-7 years ago. But now, of course, it's manufacturing. But that's just anecdotal. But tell us what you see, Amit.
Yeah. No, you're right, and there is disproportionate focus on manufacturing. In fact, people have raised manufacturing-specific funds. About 40% of the IPOs that we see are coming from manufacturing, whether it is defense, aerospace, diversified industrials, smaller companies raising anywhere between 2,000 to 4,000, 5,000 crores, seeing huge reception on the IPOs. Other than that, we also continue to see huge interest in infra, so power utilities, power infrastructure. In fact, REITs and InvITs has been a big product for us at Moti. We are also seeing huge amount of interest in tech and new age businesses, somewhat smaller companies, not the large ones, but still they are getting their growth capital. On the NBFC side, again seeing good amount of interest, but a new category which is capital markets or capital market infrastructure players have come in and raised a lot of money. So these are the few sectors where we are seeing good amount of interest from investors.
Rohit, what about you? Which sectors are you guys sort of focused on? I mean, I'm assuming you guys get pitches all the time, and
Yeah, no.
yeah, what's the interest? Where does the interest lie? Top of mind.
Every day, naturally, the funnel is very, very strong at all point in time. And talking about manufacturing, in fact, we were the first institutional investors in Dixon Technologies,
Yeah,
which of course became the bellwether on the manufacturing side.
I think
And we continue to
2009,
see
2010,
very strong
right?
action on the manufacturing front. That's correct. We invested in them way back in 2009-10.
Yeah.
Persevered with them till 2014, and then ultimately with Make in India, PLI initiatives, that has gone through the roof. So manufacturing remains a very, very strong theme. I would say 25 to 30% of our funds still go into manufacturing, be it auto components, be it electronic manufacturing, be it defense and likes. We are also seeing very strong traction on the healthcare side. You're seeing the supply chain movement because of geopolitical, again, PLI support. China plus one, Europe plus one, you can actually see on ground in pharma, CDMO and other healthcare businesses. On the domestic consumption side, which has been the evergreen sectors, let's put it in that form, financial services and consumer are the other two sectors which we continue to focus on. On the new age business, we have been very, very selective over last 10 years. More so in last 3 to 5 years when some of these businesses moved from venture capital stage to growth capital stage, where it has turned profitable or are nearing profitability is where we like our hunting ground on fintech, consumer tech or health tech businesses. And some of them are really becoming big as we speak. But I think profit for us on those businesses are very, very important as we evaluate them.
You know, I could go on with more questions, but we're out of time here. Interesting flavor from all three of you, gentlemen, to really understand what's happening in each of these three areas: investment banking, private equity, and of course, retail broking and wealth as well. Amit, Rohit, and Ajay, thank you very much for being here, part of this program today. Really appreciate it. All the best of luck as you guys continue to execute in each of your businesses. Thank you very much.
Thank you. Thank you, Prashant.
Thank you.
Well, that's it. That's the show today. That is a flavor, sort of a slice of, what Motilal Oswal is doing across, its lines of businesses. But of course, I mean, the idea is to get a sense of what's happening in the IPO market, the primary market, on the private side, what kind of deals are happening, and of course, how's retail participating in all of this. Thank you very much for staying with us. More comes up in just a bit.